This is Barry Zalma on insurance. Today, I'd like to speak about the need to determine, first, as part of an insurance coverage investigation, that coverage actually exists. A key obligation of an insurance claims person is to establish, through a thorough investigation, with the assistance of the insured and the records of the insurance company, that coverage exists for a loss once it is reported to the insurer. Often, insurers are faced with insureds who fail to report losses promptly. Some fail to report until after an adverse verdict at trial. Courts differ on the proper method of dealing with late reports of loss and claims depending on the policy wording and the law of the jurisdiction. The insured who reports a claim late will always claim that the insurer was not prejudiced by the delay, and as a result they did not breach the notice condition of the policy. This has resulted in what courts now call the Notice-Prejudice Rule. Many courts across the country, but not all, have struggled for years with the issue of insureds who fail to promptly report a loss. Over the years, a doctrine of insurance law has developed, known as the Notice-Prejudice Rule. The United States Supreme Court stated it as follows, quote, California's Notice-Prejudice Rule requires an insurer to prove that the insured's late notice of a claim has substantially prejudiced its ability to investigate and negotiate payment for the insured's claim. A finding of substantial prejudice will generally excuse the insurer from its contractual obligations under the insurance policy unless the insurer had actual or constructive knowledge of the claim. This was Shell Oil versus Winter Swiss Insurance, a 1993 decision of the California Court of Appeal, and Pitzer versus Indian Harbor, a 2019 decision of the California Supreme Court. The rule is applied universally to third-party policies, except claims-made policies. Many jurisdictions, including South Carolina, judiciously adopted a notice-prejudice rule, whereby the insurer had the burden to show that it was substantially prejudiced by the failure of its insured to comply with the notice and cooperation provisions of the policy. Where the rights of innocent parties are jeopardized by a failure of the insured to comply with the notice requirements of an insurance policy, the insurer must show substantial prejudice to the insurer's rights before it refuses to defend or indemnify the insured, regardless of the fact that the provision in the policy is clear, unambiguous, obvious, and prudently available to any insured who looks at the policy wording. Accordingly, South Carolina judiciously adopted a notice-prejudice rule whereby the insurer had the burden to show it was substantially prejudiced by the failure of its insured to comply with the notice and cooperation provisions. Because, quote, where the rights of innocent parties are jeopardized by a failure of the insured to comply with the notice requirements of an insurance policy, the insurer is required to show substantial prejudice to its rights. This was Factory Mutual versus Kennedy, a 1971 decision of the South Carolina Court of Appeal. Throughout the latter part of the 20th century, the Notice-Prejudice Rule continued to gain support and is now clearly the majority rule. For example, the public policy of Montana that forfeiture should not be enforced absent injury or prejudice is codified in Montana by the anti-forfeiture statute, and the Notice-Prejudice Rule supports the adoption of that statutory rule, which provides, quote, in a practical sense, the Notice-Prejudice Rule could be viewed as an application of the anti-forfeiture statute to situations where the potential injury to the aggrieved party, prejudice, cannot be cured by compensation, and thus forfeiture may be avoided only in the absence of injury. Additionally, the Notice-Prejudice Rule accords with the well-established contract principle of a non-material breach. Generally, a non-breaching party must continue to perform its obligations under a contract unless the breach was material to the contract. Prejudice can be presumed from some types of property policies. For example, a policy covering perishable fruit would be immediately prejudiced if the insurer was not informed of the failure of refrigeration. In addition, the insured who fails to report a loss promptly may find he or she simultaneously breached the proof of loss condition and the 1-year private limitation of action condition of the policy. The broker or agent, faced with a late report from an insured, should immediately deliver the report to the insurer with, if possible, an explanation for the late report. The California Fair Claims Settlement Practices regulations require that brokers, agents, or anyone associated with the insurer who receives notice of a loss to report it to the insurer immediately, but no later than 15 days after the agent's first knowledge of the loss. As a result, the court denied the excess insurer's motion for summary judgment based on late notice because a determination of whether the excess insurer was prejudiced by the delay was a question of fact for a jury. The district court found that the burden of proof for establishing prejudice is with the insurer. Prejudice is a question of fact to be decided on a case-by-case basis, and therefore the adjuster faced with a late report of loss should immediately protect the rights of the insurer by obtaining a signed non-waiver agreement or issuing a reservation of rights letter to the insured. The adjuster should then commence a thorough investigation to determine if the delay by the insured caused prejudice or the rights of the insurer to conduct an investigation of the claimed loss and its right to attempt to resolve the claim. In Belts v. Clarendon America Insurance Company, a 2007 decision of the California Court of Appeal, a homeowner sued a contractor for construction defects. The contractor failed to notify his insurer of the lawsuit until after a default judgment was entered. The homeowner sued the insurer, seeking payment of the default judgment. The insurer denied coverage, claiming that notice was too late. The court amazingly disagreed. It pointed out that courts have repeatedly recognized that in circumstances like those here, the insurer must show actual, substantial prejudice to prevail on a policy defense. It also rejected the notice that pointing to the results of the lawsuit would suffice to show prejudice and ruled that the carrier did not make a showing that it suffered actual substantial prejudice, and therefore even a judgment against the insured before a loss is reported requires a thorough investigation, which may have provided the insurer with facts that showed that its insured had an absolute defense to the allegations of the lawsuit, and that had it been given prompt notice, it would have retained counsel to defend the insured and would have obtained a judgment in favor of the insured. But it was prejudiced by not being allowed to even investigate because it was too late. It should be clear that in states that apply the Notice-Prejudice Rule, that the insurer must conduct a thorough investigation and establish by a preponderance, if not by clear and convincing evidence, that its rights were prejudiced by the failure to give notice. For insurance policies, an insurance company is not relieved of its contractual liability because of the insured's failure to give notice, unless it can show it has been substantially prejudiced by the acts of its insured. The Notice-Prejudice Rule does not apply to every claim where a late notice exists. Insurers have created what they call claims made and claims made and reported policies, which contain a date-certain notice requirement. For example, in Colorado, the Colorado Supreme Court found, quote, "The Notice-Prejudice Rule does not apply to a date-certain notice requirement in a claims-made insurance policy." In a claims-made policy, the date-certain notice requirement defines the scope of coverage. Thus, to excuse late notice in violation of such a requirement would rewrite a fundamental term of the insurance contract. Close quote. This was Kraft versus Philadelphia Indemnity Company, a 2015 decision of the Colorado Supreme Court. The conceptual difference between occurrence and claims-made liability policies lie at the core of this case. The Colorado Division of Insurance defines an occurrence policy as, quote, "an insurance policy that provides liability coverage only for injury or damage that occurs during the policy term, regardless of when the claim is actually made," close quote. Applying the Notice-Prejudice Rule to the date-certain notice requirements in a claims-made policy would alter the parties' agreed allocation of risk. In short, to excuse late notice in violation of such a requirement would alter the basic term of the insurance contract. Furthermore, it would prevent parties from defining coverage with certainty, no matter how definitive or express the notice requirement. Such a result would significantly diminish the advantages of claims-made policies for both insurers and insureds. Insurers could no longer close the books on previous policy periods, and policy premiums presumably would rise to account for the risk that an insured might notify the insurer of a claim after the policy period has expired. Even if insurers could somehow compensate for the additional risk, extending the Notice-Prejudice Rule to the date-certain notice requirement of claims-made policies likely would decrease the availability of this type of insurance product. In light of our states favoring freedom to contract, this is something we, the Colorado Supreme Court, declined to do. The Notice-Prejudice Rule announced in a State of Gleason versus Central United Life, a 2015 decision of of the Montana Supreme Court does not apply to claims made and reported policies. Claims made policies typically contain a second type of notice requirement, not found in occurrence policies. The requirement that the insured provide notice of claim within the policy period or a defined reporting period thereafter. Such a date-certain notice requirement fulfills a very different function than a prompt notice requirement. Where a prompt notice requirement serves to allow the insurer to investigate the claim and negotiate with the third party asserting the claim, the date-certain notice requirement defines the temporal boundaries of the policy's basic coverage terms. Even if insurers could somehow compensate for the additional risk, it's a different kind of policy. For example, the Ninth Circuit in Cox v. Liberty Insurance Underwriters, a 2019 decision, found for a claims-made policy giving notice within the policy period is what actually creates coverage in the first instance. The Notice-Prejudice Rule is typically applied to occurrence policies, which cover events occurring during the policy period because its application does not materially alter the insurer's risk. A professional liability insurer need not defend a law firm that failed to provide advance notice of a malpractice claim that any reasonable attorney would have foreseen. Reaching its conclusion that the law firm failed to comply with the policy condition, the court held that where an insurance policy requires notice of a potential claim, the insured must promptly notify the insurer when the insured reasonably might expect to be the subject of a malpractice claim. This notice requirement operates as a condition precedent to coverage and to the insurer's obligation to defend and indemnify. Therefore, absence of valid excuse, the insured's failure to satisfy the policy's notice requirement vitiates the policy, and the insurer need not show prejudice in order to assert the defense of non-compliance. This video was adapted from my book, Zelma on Insurance Claims, Volume 4, 3rd edition, from which you can receive a great deal more detail on the Notice-Prejudice Rule and why the claims made and claims made reported policies do not allow for a Notice-Prejudice Rule to be applied. It is available as both a Kindle book, a paperback, and a hardcover from Amazon.com. If you found this video to be useful or interesting to you or your colleagues, please pass it on. It's free. And please also subscribe to my YouTube channel, my Rumble channel, my blog, and my Substack publications so that you can be advised of future videos and future blog postings. Thank you for your attention.